Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And I would have to say that with ISE and this big move that we've just seen, witnessed, traded through in the euro currency, I'm going to go through today and show pretty much from start to finish how that kind of manifested, how it can be and tracked and traded, and also how a lot of people had a hard time probably maybe getting on board with it. But one thing I can say is if you did not trade in this last downdraft in the euro currency, I mean, here we are. If you're familiar with listening to the euro currency, you know it's trading roughly around 149 and change, 150 today. In fact, looking at the spot forex, just to make sure that, because there's three different products that we trade: the futures at 148.94, the SEP futures, the spot FX at 149.20 right now. So there is a difference, a disparity in premium between spot and forex. And then looking at the euro currency index through ISE, it's trading now at 66.55. So there's different ways to quote the euro currencies, different platforms, different products. And of course, there is one other. There's the FXE, which the FXE is an exchange-traded fund on the euro currency, and I'll go through that. But that closed out today on the FXE. Where was FXE traded today? Real quickly, we closed at 149.37. So there's different quotes that we can give. Bottom line, I guess that's my long-winded way of saying that. But through all of this, when you look at the euro currency and you look at what's been going on, you say, gee whiz, that was a heck of a sell-off. And you got to understand something. 2 years ago, when I went to Europe, I spoke. I've been through Prague. I spoke through a bank in Milan, the second largest bank in Milan, or all of Italy, actually. Board of Trade in London, Egypt at the IFTA 20th Annual Conference. I mean, I've just been all over the place. We'll be in Singapore coming in October. But all I can say is this, is that in the last 2 years, every time I went overseas, all I know is that the euro currency went from about 120 to then 133, then 145, and then the last time I was in Paris, the euro currency was at 155. So for me, I look at the euro currency in just the last 2 years that a little minor 10-cent or 10-point drop in the spot FX is really not that big of a deal. So the good news is this. What we can show you today may be able to help you in the years to come, because I guarantee you that with where prices are currently, we are still going to experience extreme levels of volatility. And volatility means pace of price changes and amount of price changes. And so bottom line is, if in order to make money, you kind of need the markets to be turned on. Either they can't move if you're an option writer, or if you're a directional trader, you need them to move. And I think right now we're going to continue to see moves in the currencies, and there's going to be some great potential. Now here's the problem. Most traders don't know how to identify four main conditions. A, how to stay with trending market conditions. Before we turned on the tape machine, Steve had mentioned probably the most holiest of all grails, so to speak, of trading advice, and that is advice that he got way back when, and hopefully at the end he'll elaborate on this, and that was by a mentor of his who said, you got to learn to take care of the hardest thing, which is hang on to winners and cut losses. End of story. And most people don't know how to stay with trending market conditions, which would be indicative of what? Staying with a winner. And then knowing when to get off that train ride. That's the key as well, because you have to take profits in order to get paid. So identifying when a trend exhausts itself, or what I call ceases to exist. And again, there's another thing is setting profit and loss points of interest. when am I getting out? If I'm wrong, what's the price breakdown? What am I getting out? A dollar amount, a trade amount, a condition amount if the market closes, condition meaning if the market closes above or below a certain level, then I'm out of this trade. I'm more of a scale trader. I get in a position and I start liquidating as the market moves in my favor. And then I start to kind of like manage the trade. But then I also have, in one aspect, a technical tool that I rely very heavily on, and that's pivot analysis, which gives me higher degree target frame of price levels. I don't just use the dailies. I also use longer term, such as monthly, and we'll get into that today's presentation as well. There is one other factor I think is extremely important that traders pay attention to, and that's called understanding the seasonalities of markets. Many of you know that, let's take, for example, in the grain complex, you plant in the spring, you harvest in the fall. Most times grains make what? Bottoms in the fall. Earlier this year, or not earlier this year, but back at the Traders Expo in June, I did a presentation June 19th, and you go look at your charts on this. And a lot of people were talking about the rains and the grains and how, with all the flooding, the crops were going to have to get replanted. And I'm like, listen, I've been in Chicago. I've been trading the grain since 1981, and I got news for you. When it rains by June 19th, you're not replanting corn. It's done. If the field is flooded out, they're not replanting. And people were making a big deal about, a lot of these fertilizer companies like Potash and TRA and CF Industry and Mosaic, right? MOS is Mosaic, Pt2, Potash. And I said, at this presentation, I said, look, we got a potential peak in the market right here. And quite frankly, I think it's best to maybe stand back, because let me explain the fundamentals of this. Seasonally speaking, folks, farmers are not going to go out and buy more fertilizer and plant now. It's over. And we will probably see the market in the grains peak out around the 4th of July, because they do it so many times almost every year to like a religious drumbeat. And with that said, I'd like to show you about understanding seasonalities of the markets and looking at the euro currency. Now, I want you to take a look at this chart. This is a weekly bar chart. Now, this was done, if you notice the last date, it's June of '08. This was done around the middle of June. So this is something that wasn't done before. This comes straight out of a trading course that I teach people. This is the euro currency in a 10-year seasonal pattern. What this represents is simply this. If you took the last 10 years, average historic highs, what those prices were, and the lows, and averaged them out, this is the price pattern that you would see. Notice that around the middle of June, you have a market that peaks out in the euro currency. By July, it kind of bounces back and almost forms a double top, and then the market continues lower, and the euro currency against the U.S. dollar in its short-term history of only 10 years, it generally falls into early October, and then bottoms in October, makes its yearly low around the middle of October, and then it peaks out approximately in the beginning of January. Explanation: perhaps U.S. multinational conglomerate corporations are repatriating dollars back at the end of the year, and that's where we see that market peak out. So with that said, if we have a short-term, at least in the summertime, an analysis that says, seasonally speaking, the euro currency peaks out, why the heck do I want to look at any buy signals? I want to look for potential turn signals in the market, or if I'm bullish the euro currency, I certainly may want to wait till on or about the middle of the second week in October to look for buy signals somewhere in there, and then carry long euro currencies, short dollars going into the year end. So understanding seasonalities is kind of important, and it applies to all markets. Now, here's a disclaimer. Not every year does the market make that exact timing turn. And not every year if it does make that timing turn, does it see the same price magnitude. I think we're all adults and we know that, but I just want to reiterate that we don't see the exact same price and time considerations. This is a generalization, but you definitely want to trade with the seasonalities.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.